Recessions are where most money is made. Let's go back to March of 2020. The markets were at their bottom around 8,000, but just 1 year later, we had 15,000. So the markets nearly doubled in just 1 year. The same happened in 2009. At the bottom, the markets were somewhere around 2,600, but Safed Saal Baad, they were at 5,000, almost doubled again. The only way we could have made these returns in 2020 and 2009 is if we had cash in hand, if we had sold parts of our portfolio before the market crashed. And that is the first of 4 things that I'm doing in order to make the most out of this impending recession. But before we go any further, try answering this question. Let's see how good your market knowledge is. The answer is at the end of the video. First is raising cash. And look, India's growth story is not going anywhere. We are in a 40-year growth story. But there will be multiple recessions and ye sirf pehla hai out of maybe 3 or 4 at least. Art of War mein Sun Tzu said, amidst chaos, there is always opportunity. And with chaos coming in the name of a recession, we need to have cash in hand to use that opportunity. So I have sold almost all my mid and small cap holdings, and even within large caps, I am selling if I get any rises. Now this is a big statement to make, especially on my channel, but that's how confident I am about the outcome 3 months from now. The second is about China's very shady business in silver. See, China has been buying silver from South America, but not in its purified form. It's buying silver as an ore. So इससे होता क्या है? Silver की prices में this change in demand does not reflect immediately because ore खरीदा जा रहा है, real silver नहीं. But eventually this has to catch up because the real silver is coming from ores. And as it catches up, silver should see a sharp spike. It also rises early post-recessions, so even if the spike doesn't happen now, we should anyway see precious metals rise and that hedges the portfolio as a whole. At the same time, silver has its industrial uses as well, especially in solar cells, and we know that's not going out of fashion. So even from a long-term perspective, it is a good investment and I'm giving about 25% of my portfolio just to this fund. The third is having a range of stocks that we want to invest into as the market collapses. See, even in a recession, all sectors don't fall together. So some sectors might fall first and some might fall later. We cannot come up with stocks instantaneously. So we have to be prepared right now. And as these stocks give us opportunities, we want to keep going into them. Just for reference, these are the stocks that I'm bullish on and I would be buying into them as the market falls. Now, depending on what causes the market crash and how the market recovers, I might go into 10 or 20 of them. And I will of course be sharing more information about that as we get closer to the date. But for now, this is a step that you should be taking to make the most out of this recession. Fourth is investing in tranches. So we have to start buying into companies as they fall about 40% from the top. That is my threshold. Once a stock falls 40% from the top, I'm buying into it. And I'm going 50% of my total investment value in one tranche. The stock falls another 10%, I invest another 25% of my total investment. If the stock falls another 10%, I buy 25% more, or at that time, I am completely invested in that particular company. And doing this, we make sure that we don't miss out at the bottom. Since we can't predict the exact bottom, we have to start buying at a range that seems sensible, but is not too expensive either.